All right, everyone, here we are with ticker symbol HTZ, Hertz Global Holdings Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So, Hertz Global Holdings had a run towards the end of the week, leading up till today. It actually continued the run, reaching newer highs all the way up here at 302, slightly dipped, leveled off, and the bulls tried to reappear, bringing it back up to almost $3, and then it started to fall. The bears have actually dominated this chart. So we're going to go ahead and look at this from its new perspective and where it's at on support level and resistance level, which is the highest point before the fall and the lowest point on this fall and trajectory that it took. Now, it is slightly still in bullish territory, so that is a good sign for the bulls, but this tug of war is going to be interesting. Currently at 224, and the 50-day moving average is 223. 223 is an important number because of the fact that it lets us know on what side of the chart we're in. Are we in bullish territory or bearish territory? So right now, the bulls are slightly dominating by a couple cents, or literally 1 cent, and the bears are going to try to cross it. The moment it crosses it, it's in bearish territory. And the moment the bears accomplish that, they're going to try to break through support. This support level is 212. Super important number to keep in mind for tomorrow. I'd emphasize to all investors, pay very close attention to how the stock is reacting. If it breaks through 212, and how quickly is it moving to newer lows and newer support levels? Or are the bulls even trying to reappear? Now, as I stated earlier in my previous video, 182 is the next support level, which is further away from the 50-day moving average in a downward direction, and it still is an important support level. This support level is important for tomorrow and the days to come, 182. If that gets broken through, this could start to pull further away from the 50-day moving average and hit newer lows and newer support levels. But before getting there, obviously 212 is the first support level to keep in mind and pay very close attention to. Now, the bulls are going to want to work their way up further away from the 50-day moving average in an upward direction. And they need to break through resistance. Resistance is 289. The reason why I emphasize that they need to is because, hypothetically speaking, let's say the stock starts to rise up and it kind of levels off and it misses, obviously, the resistance level. Well, this 50-day moving average will start to move up with the price over time, catching up at some point to the price, either really close to it as it is right now, as we're seeing it, or finally cross it. And now the stock is by default below, right? This is the stock right here. This is the stock. Whoa, that circle sucks. Sorry about that. And this is the 50-day moving average. So 50-day moving average and the stock. And what happened is, obviously it'll catch up real close to it like it did here, or it'll catch up to it, cross it, and by default it's in bearish territory, giving control to the bears to bring it down. And this is just a hypothetically speaking frame of the chart, just showing you guys what could possibly happen if it was to continue in a sideways direction or not break through higher resistance levels, their new resistance levels, to get further away from the 50-day moving average. That's just a visible example, right? A visual of what can happen. And that is why the bulls need to break through resistance. Resistance is so important right now for the bulls to pull away and start to hit newer highs. So they need to break through 289 so they can turn it into a support and continue this momentum, because the bears have actually torn this down fairly quickly. And as you can see here, how quickly the bulls brought this up, leveled off, and the 50-day moving average, all it's done is catch up to the price over time. And if you look at it from right here to right here before this bearish run started, there was quite a distance, and all it took for the bears to do that was 1 day, or half of a day actually, to bring it down and put it right there at this position that we're in right now. Really close to it, and all it takes is the bears to push down just a little bit more and it's in bearish territory. and it could start to head into these directions and this whole area to start to bring itself down to newer lows. So you're going to want to pay very close attention, like I said, and my emphasis to all investors is pay very close attention to how this reacts. If it breaks through 212, you have your other point of reference at 182, and the bulls need to break through 289, turn that into a support to break away from the 50-day moving average in an upward direction. I hope that with these cues, you guys are well aware and prepared for tomorrow's trading day and the week to come as well with these numbers. Oh, and also I stated the lowest point that's important right now, 182, and the highest point that's important is literally $3.02. That is the highest point reached in this bullish run, and the bulls are going to want to break through that. Obviously, they first have to break through this resistance and start to work their way up, but 302 will actually get them to newer levels and newer highs and newer resistance levels. But as always, I hope that these cues do help, and you guys are well prepared for tomorrow's trading day and can make your own rational decisions as investors. And also, if you're a first-time viewer and investor and coming across this channel, I really highly encourage you guys to look at the video that's going to pop up towards the end of this video. That has a lot of information to learn. And also subscribe. If you feel encouraged to subscribe or inclined to, you're more than welcome to. Hit the bell so that you don't miss a single video that I post. Don't forget to click on the like button to let me know you watch this video. Share this with your friends and community. And at the end of this video, as I stated earlier, there's going to be a pop-up video. In that video, I talk about the S&P 500 index and how it rises up several points. It rises up several points on scheduled dates, and I go into more detail about it in the video. But just to summarize it, the S&P 500 is rising up several points on these scheduled dates due to the Federal Reserve pumps. Now, the Federal Reserve is pumping the markets. The S&P 500 is rising up several points. What does that mean for us as investors? Well, these individual ticker symbols within the S&P 500 index are rising up with it, anywhere from 30 cents to $3 per share. And I know it doesn't sound like a lot, but $3 or 30 cents to $3 per share does add up. I know it doesn't sound like a lot, but it does add up. And like I always say, profits are profits. And if you put $1 into the market and you get back $2, you've done one heck of a job. You've done a great job. And that's what it's all about. That's what we're here for. And as always, thank you guys so much for watching. Click on the video. It should be popping up soon. And as I leave this video, to say to all you guys, thank you for watching once again. This stock is actually starting to rise. It just rose up 2 cents, and it went back down, and now it's right there at 226. It turned into a green candlestick, so that tug of war is going to be interesting. Thank you guys for watching, and let's make some money.